Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
And thank you, Ben. I'm recording this podcast on Thursday afternoon, October 16th. After the market is closed, and I wanted to make sure I got you the most current data because there was a little bit of a rally in the dairy market today. But where we need to kind of get started is on the fact that the government is shut down. So we're going to have no milk production report, no cold storage report, no dairy products report, no export data, and no slaughter data. Now, over time, some people just kind of claim that the USDA reports are kind of worthless or whatnot, but now all of a sudden we don't have them. Everybody's kind of flying blind. However, we are going to get the federal milk marketing data because that does impact prices, as well as the national dairy product sales reports and the class and component data. So those last three things will continue to be provided even though the government is shut down. So we're looking at September because you should have just got your September checks in the last day or two. And it was a wild ride settling that out. If we looked at 6 months ago, could have easily said, hey, maybe we ought to be selling all of this milk. And then all of a sudden up here at 1958, you say, Larry, you're an idiot. And then it dropped down here to 1733. And you would be really thanking me. Once again, you would have thought I was an idiot. And then down here, you would have thanked me again. So wild, wild ride. And this is where we are in October. It's kind of the same sort of thing. We've been as high as 1947, as low as 1623. And it's going to settle in here at 17 plus or minus a couple cents, I think, when we finally get that pulled together. So what does your September check look like? I think it's going to be down about 46 cents, probably on farm. Now, fat came up, protein came up. We're just very strong on components again, but fat price dropped a little bit and protein price came up. And there was a big drop in the PPD. So again, I've got it at $20.94, which is what is on the USDA thing for the statistical uniform price at pool component test. But if we look just at the statistical uniform price, again, that's at 3.5. We're coming down here a little bit, and we're kind of at the point where we were back here in 2019. So we're at the lower end of these big bull runs that we've had. Fat prices came down 53 cents to 2.19, and that's actually our low for the year, but we're going to print lower numbers here. And again, these are as of today. Made sure I pulled in the data for that. Looking like the futures are suggesting $1.83 to $1.90 for the next 4 months. But what have you guys been doing with fat? You're up significantly over last year. 4.23 a year ago, we're 4.9. And again, this has just been an upward trend. Mike Hutchins just had an article in Hordes Dairyman today talking about the cheese plants are complaining about too high of fat. So it's something that we got to kind of keep an eye on here. Protein prices came up 74 cents. Now that's way off of our low at $1.87. And basically, cheese has a fat component to it. So whenever butter fat is dropping, the protein price comes up. We should print a little higher next month, and then that's going to trail off for the next 4 months. And just like fat, you've been raising protein. We're up 6 ticks, 329. Last year, we were 323. Other solids have really just kind of hung into this 30-cent range here, and looks like that's what we're going to do. Whey is going to kind of hang in just around 58, 59 cents, which mainly is controlling that other solids, off of what we had that really big high back here at the first of the year. So I thought it might be interesting to kind of look at how you compare to the rest of the nation. So overall, for Class 1 utilization, about 30% of the milk is going into Class 1. You cannot depool Class 1. You guys are around 32%, and there's kind of a corridor through Order 1, Order 33, Order 32. That's all that 30, 31, 32. But again, the highest utilization is always in the Southeast. They're pushing 80 pretty hard. Now for Class 3, your neighbors to the west are 79% Class 3, so they're going to live and die by the Class 3 price, and you're about 33% Class 3. And again, this corridor is about the same at that 30% number. A lot of the orders actually pulled Class 3 out of the pool. Texas came down 61 ticks. California came down about 60. You came down about 4 ticks. And if we look at it on a pound basis, you drop just a little bit. So you're not significantly depooling Class 3, but we're not back at this really high level that we were at one point, around 24.5 million pounds a day. So there's probably more Class 3 to come back into the pool. Class 4 was brought back in. Texas brought in 36 ticks. California brought in 52. Again, if you take Class 3 out, you got to bring something back in. And our highest Class 4 is going to be California, and you guys are around 11%. Federal one's around 12, and then 32 is going to be a little bit higher at 21%. And you're still depooling about half of your Class 4. Again, some came back in. You're about 6.8 million pounds a day. I think your capacity is, somewhere pushing 12 pretty hard. And overall, depooling tends to lower the statistical uniform price by pulling the higher class out of the pool. So what are we likely to see here in the next few months? So it looks like Class 3 is going to be above Class 4, and this was as of 4 o'clock today, so this is very recent. The actual numbers are here, so it looks like through June, Class 3 is over Class 4, and then Class 4 tries to rally here July, August, September. Columns over here to the right are what I call the DRP numbers. It's 95% of the class. So if you look on anything you get on DRP, for example, for Q1, today is probably going to have Class 3 around 1562. Now, I don't have what the premium would be on that. And all right, so let's look at my overall view of the industry. And again, I'm at -9 in terms of being fairly bearish. I was thinking about how to present this to you. If I was neutral, I'd be looking at around $20 Class 3. If I was bullish, probably 22 to 23. And bearish is around 16 to 17. So I think we're in that 16 to 17 range. So we did get the August milk production report, which had the cow numbers. We will probably not get the September one, which is due this next week, but these cow numbers are just going ballistic. We've got the highest cow numbers that we've had in the industry for any kind of reasonable time here. So what's driving these cow numbers? I think the biggest thing is this graph right here. There's just a huge amount of investments in new plants. Now, Michigan doesn't seem to have much going on here at the moment, but look at all this cluster around southern Wisconsin, this big cluster around North and South Dakota and Minnesota. This is the reason that Riverview is going to stick about 50,000 cows up here in North Dakota. And there's been a fair amount here in the Panhandle, and that's where some of the spot cheese has been coming from recently. But these plants have just basically gone to dairy and said, hey, we need milk. Let's gear up. Let's get us more milk. But again, until we find out what's going on with domestic demand or overall disappearance, this is a recipe for low prices. And the one thing that's keeping this in the check are beef prices. And these feeder prices today have been topping around $3.80 for November 500-pound calves. And that's just absolutely incredible. Last October, we were around $2.50. This black on Holstein is just adding a tremendous amount of money to the balance sheets. Even 1,000 cow dairy is probably picking up close to $1 million if they're breeding a significant number to black calves. But again, all we need is about 0.73 replacements per cow, and we can keep growing these cow numbers. So in August, the milk per cow is again very strong, and if we look at that, that was a record milk per cow. So not only are we adding cows, we're getting better at making milk. And fat percentages, just like the order 33, are just going ballistic here. And this is going to be a new record for August fat percentages. So I wanted to look at the disappearance for just a minute. We did not get the August dairy products report. So this is looking back at the one that we had in last month's podcast. But one of the things I wanted to talk about is I see this kind of going up and then breaking here in 2023 and then kind of leveling out. And the question is, why did we have more disappearance? So right here, that disappearance that seemed to be going up a little bit is probably exports, but exports still are only about 30 million pounds a month, so that's not enough to drive this up significantly. I think the real answer is in population growth, because through 2020, we were in a very positive population growth. Now, granted, it was probably declining, and now it is declining even a little bit more. And again, I'm not going to take a stance on immigration, but you take 1 million mouths out of the country, you're going to have 1 million less people eating cheese. And so I think this is one of the things that's really starting to impact our overall disappearance, is the fact that we're now in a negative population growth. So the one thing that we're hoping for is exports. Again, we don't have the export number, but we've been exporting around, let's call it 10% of our cheese. The last global trade was actually down just a little bit. But right now, butter, you would think that we ought to be exporting a huge amount of butter. But one of the things I commented to Mike Hutchins in his report today was that he said we ought to be exporting butter, but the butter that is on our milk checks is 80% fat, and what the world wants is different than that. So we just make a lot of butter, but we just don't make the right kind to export. Kind of like cheddar, all we export is white cheddar. But right now, global dairy trade's $2.21. We're at $1.77 on today's spot market, so we should be exporting. Now, non-fat dry milk is about a 14-cent difference, and that's getting close enough to do some exports, but this non-fat dry milk is probably going to have to drop another 4 or 5 cents before exports really pick up. So one of the problems with the industry right now is the futures market, which is futures plus 40 cents, that green line, has got a significant premium, or the futures contracts have a significant discount. And I think what that is coming from is the traders just don't believe what's going on. They just have no data, so they've just kind of got to go by gut. They've got themselves all in a negative mood that this industry is very bearish, and of course I'm in that same camp. And so as the spot market comes up, they just don't allow those futures to come up. Now again, everything settles to the National Dairy Sales Report, so it really doesn't matter what the futures say at the end of the day. But again, it makes it a bit nervous when you see these futures so far below the spot market. And I always ask myself, why are you so bearish? And this is a graph I look at almost every day. This is a cumulative change in class 3. And so what I do is look at the next 12 months and just how did that change compared to yesterday. You have to set 0 at some point, so I set that back in about June of 2024. We had this nice run up about $1.50. We gave all that up. We kind of bopped around here, and then we started coming down, had a little rally back here in May, and now we're down, well over $2.10 from where we started. So this is very much a bear market here. Turn to grains for just a minute. So again, these are the prices as of today, and this is a change from a week ago, Thursday. It's been a relatively good week for corn and beans, coming up a little bit. And the one that I think we really got to keep an eye on is the corn one, because we're at the very top of this channel that we've had for a while. We did not get a WASDE report, so if all of a sudden we find out that the yield is much lower than what we thought, this thing is going to just kind of take off here. And this doesn't seem to be under as much geopolitical pressure as what soybean is on between the US and China. So keep an eye on this. Again, anywhere down here in this 150, again, this is without basis. I've been arguing that's a good place to lock up your corn, and so we just kind of take a look at that. And this is where we ended up today. Again, almost every day feeder cattle and live cattle have been in the green. This is today's settlements, but again, fairly good day on agriculture. it was oil and natural gas that were down the worst. And of course, hogs are just getting beat up pretty bad. Finish up with weather. I guess it's official. We're now in a La Nina. So what does that mean to the weather? There are some people that are arguing that this is going to be one of the worst winters that we've had in a long time. There's others that are not quite in that camp, but a La Nina would suggest that we might be a little bit colder. It does look like that the jet stream is going to be more undulating here for a little while, and keep a high out here in the southeast and a little bit cooler up there in Wyoming and Montana kind of area. And if we look at the next 6 to 10 days, again, this was as of last Friday, so this is a little bit older now, but again, very warm here in the midsection, very cold out west, and then precipitation, there's not a lot except this section here in the upper mountain area that's going to be slightly above, but here in New York, we're going to be below, and you guys are going to be pretty well normal. And now back to you, Ben.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.